Hey guys, this is a quick video on backspreads. I'm going to be assuming that you know general options theory, but I can go more into detail on that in another video. So a backspread is a volatility spread, which means that as long as the market moves either up or down, it doesn't matter, you make money. With a backspread, you can have somewhat of a say in what direction you want the market to move, but we'll get into that a bit later. Longing a backspread generally means you do it for credit. And again, I'll go into that with these profit loss charts. And because it's a spread, it's delta neutral, and that means it moves at the same rate as, well, the value of the spread moves at the same rate as the underlying asset. So you're not really affected by how in the money or out of the money the spread is, or how volatile, well, yeah, basically that. So you can either have a call backspread or a put backspread. And as you can read here, a call backspread is generally bullish and a put backspread is generally bearish. And in a backspread, you're longing more calls than you're selling. But because of how in the money or out of the money each leg of the option is, you're still remaining delta neutral. So going into a call backspread, because you have more long calls than short calls, you make more money as the price increases. But if the market moves against your favor a lot, your long calls might expire worthless, but your short calls will expire and you get to keep the premium, so you still stay profitable. Oh my bad. But worst case scenario, if the market doesn't move, then you're at the end of the day, your long calls will not have any intrinsic value, and your short calls will not really generate much premium. So that's where the money you put in or to buy the long calls all goes away. Oh, and that's why you lose money here. In the exact opposite way, if you long more puts, then as the market goes down, then you make more money. But if it goes against your favor, the puts you sold let you keep the premium, so you make money. And again, if it doesn't move, then that's the worst case scenario, and that's how you lose money. Because you can buy backspreads, obviously you can sell backspreads, and those are called ratio spreads. And for that, these are basically charts. This would be the call, or this would be you selling a call ratio spread, and this would be you selling a put ratio spread. And I'll go more into detail for that into another video. But for this, these are how you actually enter into those positions. Because you buy more, let's start with calls at least, the call back spreads. You would have to buy or long more higher strike calls. And because the higher strike calls are more out of the money, they have a lesser delta. And to compensate, you would short less lower strike calls. And because lower strike calls are more in the money, they would have a higher delta. And again, a higher delta means it moves closer to the same rate as the underlying asset. Together, it leads to a delta neutral position, and you have more long calls, which results in that chart. And in the same way, if you long more lower strike puts, that means and because lower strike puts have a lesser delta because they're worth less, and because a lower strike put means the market has to go down way more for it to have intrinsic value. And if you're shorting a higher strike put, that starts with a higher delta, so you again have more long puts, and that results in this profit loss chart. So the best time to use this is if you think the market's going to move a lot, and obviously you want to have somewhat of a say in how you want the market to move. For general examples of how you can use this, let's say that right now the market is bearish or is bullish, but you don't know if it randomly might turn the other way. So you want to stay to the trend that it's going to go up, but you don't want any of the risk that it goes down and you just lose all your money. So essentially, you still have a say on how you want the market to move, and as long as it's volatile, you're golden. So yeah, that's Backspreads. If you guys want to screenshot this as like a notes page, you're more than welcome to. And yeah, hope you guys tune into more of my videos. Bye.